What is fund balance? It's simply the difference between assets and liabilities in a governmental fund. Generally, the governmental fund's balance sheet reports cash and other financial resources, like receivables, as assets, and amounts owed expected to be paid off within a short period as liabilities. The fund balance is what's left over after the fund's assets have been used to meet its liabilities. What are the fund balance limitations set by the legislature? By entity type, the general fund balance may not exceed, for towns, 75% of the GF's total revenue, for cities, 25% of the GF's total revenue. For larger counties, the greater of 20% of total revenues or all current year property tax revenues. For smaller counties, the greater of 50% of total revenues or all current year property tax revenues. For interlocal entities with GF budgets greater than 100K, the greater of 25% of the GF's total revenues or all current year property tax revenues. With GF budgets equal to or less than 100K, the greater of 50% of the GF's total revenues or all current year property tax revenues. For local and special service districts, the most recently adopted general fund budget plus 100% of the current year's property tax. If your government's fund balance exceeds its limit, it must be corrected during the next fiscal year by either including the excess balance as available resources or transferring the resources to a capital projects fund. In our budgeting digital short, we learned how general fund revenues must equal expenditures. However, if your balance becomes negative, certain requirements must be met. If it's legally negative, which is allowable for qualified emergencies, you need to appropriate 5% of fund revenues per year to pay off the deficit. If it's illegally negative, you're required to appropriate the entire deficit amount the following fiscal year.